Good morning, everybody. Hey, I hope you survived last week's storm as we were out quite a bit last week with the power and internet being off for most of the week last week. But glad we're back here today. Everything's back up and running, electric power. Hopefully, you're up and running as well as we head into this week of October. So, with that being said, we had a good day on Friday. We'll talk about that and more when Dave joins us here in just a few seconds. Before we do that, though, let's not forget that, like the storm that came rushing in, there are so many things in life we cannot control. However, you can take control of your investment portfolio by knowing the amount of risk you have in that portfolio and making sure that it lines up with the amount of risk you should have in your current portfolio. Give us a call at 863-382-0037 to schedule your core retirement design. Hey, with that, we got Dave coming up next.
Morning here. It's 20 before 9 at your 105.7 Highlands Light FM. Good morning.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
So there. It's time to check in on your money and find out what's going on Wall Street this morning and with the rest of your IRA and 401k holdings. On the telephone, we got him back. Phillip Statler from Statler Financial Services here. Phillip, you got phones, I got phones. The world's back together again, isn't it?
Yeah, man, we got internet, we got power. It's a little crazy when you don't have those things to rely on anymore.
Absolutely. It was really rather funny. Yet last week on both Thursday and Friday, we didn't have internet here. I was in the dark on Thursday because our backup generator only powers up our electronics. The lighting is on another circuit, so consequently, I was living with a flashlight, tethering the computer to my cell phone because we didn't have internet, and I actually managed to get some information out, but. First world problems, but it felt like roughing. I'm here to tell you, it's kind of nice to have everything back again. Backing up to Friday, we had a barn burner day while we were busy picking up sticks out in our backyard. The Dow went up 410 points, set another new closing record. Standard & Poor's went up by 35 points, set a new closing record. NASDAQ started getting closer to its all-time high. It was up 61. Just one of those really nice endings to the week that kind of made you feel all's right with the world, and a couple of new records to boot. Not a bad day in the equities market overall, was it?
No, not a bad day at all. I got to tell you, Dave, the big winner Friday was the Russell 2000. It was
Didn't check. How'd they do?
2.1%.
Criminy.
The small caps didn't want to get left out.
Yeah, that kind of surprises me because the conventional wisdom that I'm reading right now is that there's a building case for a no-cut November Fed meeting. I mean, you take a look at it. The CPI last week showed price increases about 0.1% more than expected. Then on Friday, the producer price indexes kind of confirmed that. And then our unemployment claim report showed that the unemployment situation remains about where it's been. We're not in a crisis in the labor market. It kind of gets to the point where the case is starting to build for bypassing another rate cut in November. I kind of figured, and I didn't look, I kind of figured that the small caps that were more debt service dependent might very well have a bad day off of those tidbits. Evidently not.
Nope, they was following through with everybody else. They didn't want to. They wanted to be on the same bandwagon.
Fear of missing out, right?
That's right. Because they're calling this, of course, right, a mega cap bull market right now. Yeah.
Yeah, and then the multiple still. I mean, like, you and I were talking about it before the hurricane whacked us so bad last week that, the multiples on the Standard & Poor's 500 price earnings ratio was starting to look like a NASDAQ number instead of a Standard & Poor's number as far as the amount of multiples that we're willing to pay for stocks. And it kind of surprised me. One of my charts that came out this morning on one of my tip sheets, we would think that the current bull run is just absolutely out of control. It's going completely apey and whatnot. Well, they measure our current bull market from the 12th of October of 22 and through the end of the month of September. That would only be like the 10th longest bull market in the history and nowhere near the biggest run-up in price. The price change on the S&P in this process of the bull has been 61%, which sounds monstrous, but you date back into the 60s and the 80s, we had 582% bull markets, 228% gains in the bull markets. If we can just start earning some money to match these multiples, this bull market really hasn't been obscenely out of hand. It's just the earnings aren't matching the multiples so far.
Yeah, exactly. It is one of those cases. So it's one of those things that eventually the stock price and the earnings multiple have got to line up. And I'm not sure how long it's going to take for that to start to happen and which way it's going to go. Are earnings going to go up or stock price is going to come down to make that happen, Dave?
I would much rather the earnings go up, but the conventional wisdom for this particular quarter's earnings season isn't necessarily boring any great predictions out for that, because the earnings projection that we're expecting out of these companies in the S&P is going to be considerably lower than the growth that we had last quarter as we start getting a little bit more conservative about what we're expecting out of our holdings.
Well, that's true, and we continue to watch that. I will tell you something else I've been looking at too is the 30-year Treasury, all the Treasuries actually. The 30 years creeped back up there pretty high. It's up It's up to 4.41%. That's a pretty big jump from where it's been hanging.
And off of the September jobs report, we pretty much got the same effect on the shorter-term Treasury yields. We're over 4 on the 10-year as well right now. What's this about reducing interest rates they were talking about, huh?
Yeah, we're seeing it. We're definitely seeing that it's not happening, and at least in the Treasury yields, it's not happening.
Absolutely. Well, that's that fear of missing out mentality, because a rising bond yield generally means they're selling bonds. They're putting it somewhere, and they're putting into some probably ridiculously overpriced equities based upon what you and I were just talking about.
No, that's true. Hey, this week we got a couple things happening this week that could move the needle a little bit. On Thursday we got the normal job stuff, but we also get retail trade, what the retail is doing, and then on Friday we get housing starts. So those Thursday and Friday those numbers could help or hurt the market when we look at those.
Absolutely. And if folks haven't figured it out yet, it's a very quiet Monday, because, and I didn't think about that, but it's Columbus Day today, and that means the bond markets are actually closed, so consequently a whole lot of the reports that come out have kind of been delayed until Tuesday. It's kind of half a holiday. The equities are trading, but the bonds aren't. So we started out on Friday with, I think if I remember correctly from the reports that I got in Friday morning, of the 4 major financials that came out, we did 3 beats and 1 miss, if memory serves. Might be 2 and 2. But it was not a really exciting debut for one of the majors. Wells Fargo missed on virtually everything, and they were blaming a shortage of interest income. One of the other big banks that reported was saying that they set a new record in terms of both balance sheet and interest income. So we're getting a really mixed picture so far. Tomorrow is going to be interesting, because we're going to be Bank of America, Charles Schwab, Goldman Sachs, J.B. Hunt, Johnson & Johnson, and Progressive among the other big companies that will be reporting. But it's kind of the second half of the financial flood tomorrow. And you and I have always talked about how the financials are kind of like a canary in the coal mine, because they have their fingers into virtually every other business, and if they're not doing well, that's not a harbinger of good news for the overall market.
No, it's really not, and so those guys kind of lead the way when we start looking at earnings. I want to talk just a minute about a couple things that we did see, Dave. Boeing plans to cut their workforce by 10%. That's 17,000 people that are going to be jobless. Now, I know that right now they're going through some other issues as far as striking workers and that kind of stuff, but when it's all said and done, there's going to be 17,000 people that don't have a job to come back to. And then so I thought that was kind of interesting. It's not helping their stock price any at all, down another 1.8% this morning.
And any financier will tell you that it's never been successfully done where you can cut your way to growth.
Well, that's absolutely right. Absolutely right. Hey, the other day we talked about, it was a week or two ago, we talked about Hims and Hers Health and
Yeah.
how the Eli Lilly deal from the FDA, their stock really tanked. Well, today they come out and talk about the FDA has made another change now that is going to allow them to sell their custom-made weight loss drug that includes their own version of Eli Lilly's weight loss drug, Minerno. And so that's got them trading up this morning, not making up for the big loss they had a week or so ago, but up still almost 10% this morning.
Cool. Yeah, I remember Hims and Hers, kind of basically in shirt sleeve English. They were a private label compounder that was kind of selling a generic of Lilly's drug anyway, weren't they?
Yeah, they were compounding it with another drug, and so it wasn't just their drug. It was a combination.
Intriguing. Other stuff going on this morning that you're aware of. I did mention the bull market. That was the research I had in the bump up in the bonds. We do need to mention that the Asian Rim was a little disappointed because the Chinese finance minister said, "Nah, I think we've done enough stimulus for a little while." Everybody was hacked off at the Chinese government, and that ends up messing with the oil markets. When we get to that point, we're going to see a substantial dip in the price of oil. But that's causing a little bit of upset in the Pacific Rim. I was kind of surprised by the fact that the Chinese markets in general were up this morning at 6, but we still have a challenge over with one of our major trading partners trying to get their economy out of a slump that they've been working on now for the better part of 3 years.
Well, yeah, it's they have been. It's been a long haul for them. It's I'm going to say kind of unusually long. You would have thought by now that they would have, worked their way out of this situation, but they haven't. They keep hitting a few walls here and there, whether there's real estate, whether it's import, exports. They continue to have different things pop up and affect them. So it'll be good. It'll be good, when the whole world is focusing and running on all cylinders.
Yeah, starting to function normally again would be kind of nice. I mean, China's nowhere near Japan's record of a quote-unquote lost decade, but they just keep getting hit with other things: real estate bankruptcies, import and export wars with countries like ours, and labor issues. It just has not been a good time in China. I think, what was it, 5 years ago, you and I were talking about how they were reporting economic growth of only 10% because they were expecting more.
Yep, exactly.
Now we're looking at actual retrenchment down the line. Anyway, put it into a ball. It's kind of a semi-quiet day because, as you say, the bond market is closed, but they are trading equities in a little while. 45 minutes before we open, what are we looking at?
It's not a bad day today to start out. The Dow is in the red by $65, which is down a little bit more than 0.1%. Everything else, though, on the index side is pretty good. The S&P 500 is up 0.2. NASDAQ 100 is up a little over 1/3%. On the other side of the coin, we've got silver slipping almost 1.2% to $31.38 an ounce. Gold's down about 0.3%, is trading at $2,668 an ounce. Crude oil heading the right direction today, Dave, down 2.1% to $73.95. Just get below 70 would be great.
Well, a few more bits of bad news out of China. They might be able to do that because they say that's the reason the crude oil market was slipping. Asian Rim was interesting. It must have been a buy order put in by the government after their finance minister hacked off all the financiers because the Chinese mainland markets both up about 2% as of the 6 a.m. close. Most of the rest of the Asian Rim was kind of circumspect on the whole thing. Hong Kong was off by 0.75%, but Japan actually put up a pretty good-sized gain. Over on the European community, they're just gradually a little bit up on balance. The UK is off by a little bit. Everybody else is in a modest amount of green ink, maybe between 0.1 and 0.2% up halfway through their trading day today. Getting my retirement plan together takes planning with a separate set of eyes that actually has all the factors in mind. How do I find you to get a look at what my plans look like, Phillip?
Dave, there's a lot of things we cannot control, like the storm that came boiling through here. However, you can take control of your financials and your investment portfolio by knowing the amount of risk you have. That's why I developed the Core Retirement Design. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 730 and 95.3 FM.
And back together again tomorrow morning. I think the phones are on for good now, so I'll see you then. Fair enough?
All right, buddy. Have a great day.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I hope you weathered the storm well. Give us a call at 863-382-0037 to schedule your core retirement analysis. Hey, with that, we'll join you again in a couple days. Bye now.